Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. In this week, we're going to be talking about a company that's been on a rapid rise in the last couple of years, and it's been growing specifically a lot in the United States and North America, and that is Adidas. They are a huge international sportswear company that has been around for forever, and people have known about it for forever, but in the last couple of years specifically, they've grown in the States, which is by far the biggest sportswear market in the world, and that's propelling them to be the big company they are today. And it seems like they're only getting bigger, but I wanted to have an episode today sort of to look at how they got here, a little bit of their history, what they've done in the last couple of years to take over this market share in the United States, and then what they're doing going forward to propel themselves in the next couple of years as they try to really catch up to Nike in the States specifically. So before we get into what's going on today and how they got here in the last couple of years, it's helpful to know a little bit about the company's history, just so you have an idea of what they're all about. So it started in the early 20s. So in 1924, Adi Dassler, his real name is Adolf. So that's how they get the name Adidas, basically. Adi Dassler, him and his brother started making track cleats, basically, in the Bavarian region of Germany. By 1936, Jesse Owens was wearing their cleats in the Berlin Olympics. He won 4 gold medals. That was the Hitler Games, because Nazi Germany was already in power in 1936. So they were on a rapid rise. I mean, they have a guy winning gold medal in their cleats, but then World War II breaks out. They stop production until the late 40s. Adidas basically starts in 1949 when Adi Dassler and his brother split up. His brother then starts Puma, which almost sounds like it's got to be out of a movie. Two brothers split up and they both start huge international sportswear companies. And then by 1954, the West German soccer team, which was basically the German soccer team, wins the World Cup wearing Adidas cleats. What was revolutionary at the time was that they were retractable, or you could remove the spikes, replace them with new ones, which I guess really helped at the time. It was brand new technology. So that helped them grow because soccer is a big global game. Really popular in Germany, really popular in Europe, really popular pretty much everywhere but the United States at the time. By 1967, they started making apparel. They debut their now famous tracksuits. Franz Beckenbauer, who is a world famous soccer player, a big German star, one of the most historic legends of world soccer, he's in their first ad with these tracksuits, lacing up his white and black Adidas. And a little bit before that, Nike had started. So in 64, Nike starts. It starts this, what is now a global race for dominance in the sportswear market. And then by the mid-'80s, you have Run DMC, the American hip-hop group, releasing a song, My Adidas. It's getting a little bit of like cultural relevance outside of sports, and specifically in America. But then sort of things went a little bad for Adidas, basically. The Dassler family was out of the company. Adi had passed away. His family then got out of the company by the early 90s. By 92, they almost went bankrupt. So that's what's crazy, is that in the early 90s, they had almost hit rock bottom, and now in the last 30 years or so, less than 30 years, they've really taken off. In 2010, they had a new 5-year plan, which didn't really work, because in 2014, they were losing, their revenue was falling in North America. So that's only 3 years ago, they were losing revenue in the States, where now they're growing by like 20% in the United States. So what really changed that is that in 2015, they had a 5-year plan, which was they're creating a new, and it focused on 3 things specifically. And that was speed. So speed to market, speed in decision-making. Just they want it to be as fast and as streamlined as possible. The second is cities. and they wanted to focus on 6 international cities that they think, and this is directly from them, this is to grow mind share and market share, and just basically build trends from these international hubs. So they picked New York and Los Angeles in the United States, Shanghai and Tokyo in Asia, and London and Paris. And that's where they are basically doing like grassroots, getting movers and shakers of the fashion world and just culture in these big international cities to get the brands, like just growth in these big cities. And they've actually seen like outsized market growth in those cities compared to their overall growth. And then the last is open source. So they say they want to be the first sportswear company that invites athletes in to get their feedback, which that's not really true. Companies do that all the time where they ask for athletes' feedback, but they also want to have consumer partners and just outside people help them going forward. So that's their plan. So it's speed, cities, open source. And that's March 2015. In the last 2 years, they've really risen since then. 2016, they hire a new CEO who was not a part of the retail world at all or the sportswear world at all. It's Casper Roysted. He was from, I think he was in like packaging or something like that. I forget exactly what company he was the CEO of before, but he takes over in October 2016. And since then, like I was saying, it's just really taken off. So looking at 2016 specifically, I was listening to their basically not earnings call, but it's their year in review. It was a video on their website, and their CEO, Casper Roysted, was talking for about the first 20 minutes, and he was talking about 2016 specifically, and he pointed directly to their creating a new strategy. He basically said there is no doubt that it's created brand desire and grown our top line and our market share, especially in the United States. He pointed to speed, but not necessarily in the way that I would think of it. They were talking about how they don't want to ever have to sell at a discount. So whereas before they would, at the beginning of a new season, they would sell to their wholesalers and it would be more ballparking based on what the sales are going to be. But they now will be able to do in-season replenishing, so they're never having too much, where then at the end of the year or end of that season, they then have to discount their stuff because they're just too much supply at these stores. So they're trying to really make sure they're never being on a discount, and they're quickly being able to get new replenishing orders to all of their wholesalers all over the world. 2017, they really tried to implement that more in the United States, whereas 2016, it was more focused on Europe and some of their international markets. He also pointed to the cities, basically saying that the LA and New York and Tokyo and all of those places was really growing their presence internationally, because as simple as it seems, these hubs of New York and Los Angeles and Paris, they really do create trends that then trickle out everywhere else. And they talked about the open source, and then he specifically pointed to Kanye West in their relatively new partnership with him, creating what he said was global buzz, like enormous global buzz. And he says buzz because it's not actually like a revenue generating thing for them specifically. It's primarily what he's called a brand activity. So in 2016, those things helped. They had an operating income of more than $1 billion for the first time ever. Revenues were up 18%. Adidas brand specifically was up 22%. Everywhere, if they break it up into performance and lifestyle, performance was up 13% and lifestyle was up 45%. And their CEO was saying that those are kind of artificial things because people could be wearing their performance lines on an everyday kind of basis, and people could be wearing their lifestyle lines to actually run. So that's just how they've broken up those categories for themselves. And when I say that Adidas brand was up 22%, they also own Reebok. So that's part of their company that's not doing as well as Adidas. They might eventually, who knows, they might sell it off, you never know. But Reebok grew like 6% in 2016. And one of the biggest things, which is going to help them a lot going forward, and what all of these retail companies really need to do, is they're growing their e-commerce. E-commerce grew for them like 60% in 2016. They surpassed $1 billion in e-commerce sales for the first time. It really helps them to engage with their customer base. They know what their consumers want because they can look at all the metrics specifically. It's on their website. They know all of that. And going forward, he said e-commerce is like one of their single most important things. It's more important than all of their actual physical stores all over the world, more important than all of their wholesalers all over the world. Online business is key for them. And then what really has gotten to the point where everyone's talking about Adidas is that they're growing really quickly in the United States. So in 2016, they grew really fast in the US, and that's a really big deal because it's a third of the global sportswear market in the US. And before they were in the US, but it wasn't as big as it is now. I think they're now like 10% of market share, something like that, maybe. And then in 2016, they also had the number one selling shoe in the US in terms of dollar value, and that was their Adidas Superstar. So the number one selling shoe in all of the US was their lifestyle. It's the white with just the 3 black stripes, top selling shoe in America. But still, even though they did really well in 2016, their CEO pointed directly to saying, we are not happy with where we are in the US. Like we want to actually compete with Nike. Like it's the only market where there's like a huge difference between them and Nike. Everywhere else, they're pretty neck and neck, and Adidas is above them in a lot of places, specifically in Europe. But they need to do well in the States, and they know it, and they're going to keep pushing for that. And that is what they did in 2017 as well. Now, getting into 2017, one of the big deals of this year so far for Adidas, besides them growing revenue pretty much all over the globe, especially in America, is they passed Jordan Brand as the second most popular sneaker brand in the U.S. during the first 8 months of the year, so it might not shake up to be like that for the whole year, but that was a big, big deal. This is from NPD. It's a market analyst group, basically. One of their sportswear guys specifically looks at shoes a lot. Matt Powell said he had never seen a sneaker industry grow this fast ever. He's been covering this for forever. And they now have about 11% of the sneaker market in the U.S. And in 2015, they only had 4%. So they grew like 6% in a year and a half, which is a huge deal. But they are still really far behind Nike, who now I think is 37% as of like September. So 37%, huge difference. They have a long way to go. Also in 2017, Adidas cut some of the fat of their company that they didn't think was doing well enough. They got rid of TaylorMade. They sold TaylorMade, Adams Golf, and one other golf brand. Nike also got out of golf business recently, so it seems like these big companies are slowly just getting out of, like, they're just getting rid of things they're not really doing well at. Nike wasn't selling many golf clubs, golf balls. TaylorMade wasn't doing as well as Adidas wanted it to do. Now we're going to look at their most recent quarter, the third quarter. Overall sales increased 12% across the globe. Growth slowed a little in Europe, which is not the greatest sign for them, but it grew in the U.S., which is what's a big deal. Revenue grew 23% in North America, 28% in China, which is a fastly growing market that all these companies really care about as well. But 23% growth in North America for a company that's been around since the 50s is kind of insane, especially when you think that Nike's revenues in North America in their most recent quarter fell by 3%. So Adidas is growing by 23%, Nike's falling. That's a good sign for them long term. What did happen, though, in their most recent quarter is that their running was doing well, outdoor categories were doing well, but soccer and basketball sales were down. Basketball was down big because they lost their NBA contract. They had been the jersey producer of the NBA for, I think, a decade. Now Nike has it. Soccer was down a little bit, which they call football. If you're ever looking at their revenue statements, if they say football, that means soccer. They're not really in the football business. They lost a big Chelsea FC contract, a big English Premier League club, which is a big global brand. Nike actually took that for them as well. So those aren't necessarily the best signs for them. But what is a great sign, they're growing in China, they're growing in North America, and in the first 9 months of the year, revenues increased like 16%. Their stock price is, as of the time I'm recording this, up 40%, whereas Nike's revenues are falling. Under Armour's revenues are falling. Now it seems like Nike and Adidas aren't really worried about Under Armour at this point. They're competing with each other. Adidas doesn't even really reference Under Armour. They're just going for Nike. They're going for the number one spot. And then for some perspective on like how they're growing this brand and who they have, because as easy it is to say that like sponsorships don't matter and that like having athletes under your umbrella doesn't matter, that it doesn't actually grow sales. Like there is a reason that people are doing this. Like there is a reason Nike sponsors as many different leagues and players and teams as they can, and there's a reason Adidas does it as well, is because you need these top athletes to be wearing your brand or you're irrelevant. I mean, Under Armour is pretty much irrelevant globally because they do not have soccer, so to say. They had a Premier League team. I think they have one still now. But Adidas is a soccer brand by and large still today. Their basketball is falling off. Their sponsorship of Derrick Rose was good. It was shaping out to be good, but then sort of all of his injuries have derailed his career a little bit. They have James Harden now, Damian Lillard, Andrew Wiggins, Brandon Ingram, which unless you're really a big basketball fan, you probably don't even know who most of those people are. So that's not a good thing for them. I can honestly, I mean, this is just speculation. I can see them maybe getting out of the basketball business in the next 5 years or so if it just, I mean, maybe not completely, but if it's not doing well for them at all, and they're so far behind Nike in the States, and that is where basketball is huge, that they might just say, we're going to cut our losses and move on. I don't know that, but it could be something they do going forward. In terms of soccer, though, they have big brands, they have big stars. They sponsor Lionel Messi, who is probably one of the most recognizable athletes on the planet outside of the United States. Paul Pogba, one of the biggest players on the biggest club in the world, Manchester United, also a French national team star. They sponsor Real Madrid, which is one of the most valuable companies. I guess it is a company, basically. It's one of the most valuable sports teams in the world. Bayern Munich, in basically their hometown in Germany. Mega brands. They have, like the CEO was mentioning before, Kanye West. Basically, in 2015 was when their real partnership started. And since then, they've really taken off. So you can say that doesn't matter. He doesn't really drive any sales. He does have cultural clout, especially in the United States. And his shoes, specifically the Yeezy shoes, have just basically have a lot of buzz around them. The Boost line then is what their big line is in the States and pretty much everywhere. If you go on their website, they have a million different models of their Boost brand, which is their sort of lifestyle / running shoes. That's what you'll see a lot of the people wearing. And that is when they first introduced it, those were like selling out. They couldn't make them fast enough. And they attribute a decent amount of that, at least, to the buzz of Kanye West. MarketWatch reported that when they introduced the Yeezy shoe, that Adidas' share of the secondary sneaker market, which is like resale, which is where Jordan brand is huge and a lot of Nike classic shoes are huge. They went from about 1% of that market share in the United States to 30% really quickly, which is something that is helpful in this. I mean, sneakers are a big deal in the US, and that's where you make a lot of money, whereas like a company like Under Armour has basically no presence there at all. They don't make a majority of their money from shoes, where a Nike and Adidas do. So moving on to what Adidas is known for and what they have been known for forever, and that is soccer. This summer is the 2018 World Cup in Russia, and that is where the Nike and Adidas battle for global soccer supremacy will be on full display. There are 32 teams. Adidas will be sponsoring 11. Nike will be sponsoring 10 teams. But more players this year will actually be wearing Nike shoes, which is a big deal. So even teams that are sponsored by Adidas, some of their top players will be wearing Nike shoes. And that's something actually Nike has tried to really do, is that if Adidas is the sponsor of the team, either the club level team or the international team, they will try to then have their best player sponsored by Nike. So Real Madrid is sponsored by Adidas for their jerseys. Their best player, Cristiano Ronaldo, Nike sponsors him. For the German national team, sponsored by Adidas, they'll try to scoop in and get the best players wearing Nike cleats, and that is something that Adidas will need to try to curb. They don't want all of a sudden Nike to take over soccer in Europe, because then things don't do well for them there. But that's just the pros. They are still doing really well in terms of amateur soccer players, because it might sound goofy to a lot of American people to think that there are grown-ups playing soccer for recreation, but there are. It's like basketball shoes would be here in the States. A lot of people buy football cleats all around the world. I should say soccer cleats. So since 2014, Adidas amateur sales have been like 42 million pairs, and Nike's only been 30. So they're doing well there. And they're also heavily now invested in Major League Soccer here in the States. So that's going to help them grow, hopefully, their American brand even more as the MLS grows in popularity, that then Adidas will grow in popularity as well. They also now are sponsoring the NHL for the first time. Reebok was doing it before, so that's their company as well, which kind of seems weird that Adidas is sponsoring an NHL, but it's the fourth sport here in America. They do wear hockey jerseys, are really expensive, and they're also really popular. We're recording this in Chicago. I live in Chicago. The Blackhawks jerseys are everywhere. If you go to a Blackhawks game, widely popular. They sell for like $160 or something like that. So that's a smaller deal now that they're out of the NBA, because Nike took over from them. But now looking forward into the full year, in the fourth quarter, they're expected to report in, I think it's on March 14th they're supposed to report. And so for their fourth quarter sales are supposed to grow by like 18% to hit $5.97 billion, so basically $6 billion. And then for the full year, their revenues are supposed to be up about 16% to hit almost $25 billion, $24.83 billion basically. And then their earnings per share is expected to hit $3.86, which would mark around a 40% year-over-year jump. And then looking even farther down the line, the next 3 to 5 years annualized, their earnings per share is supposed to grow at a rate of around 18.5%. And these are all based on our Zach's consensus estimates for the fourth quarter and the full year, and then the next 5 years for their earnings per share. So they're supposed to be growing again big, which is crazy for a company that's been around since the 50s, that they're going to be growing their revenue that hugely in 2017 when they started in 1949. And their stock price has basically been up like 34% this year. And then looking forward, what's really going to help them grow, and this is something that the CEO has pointed to directly, and something that a lot of people listening might think is just sort of nonsense, is that they're going to really try to focus on sustainability. And what they're doing specifically is a lot of the plastic and materials in their shoes is recycled plastic, specifically a lot of ocean plastic. And I've read places that say that's not going to help them at all. It's not going to help them whatsoever. It's just sort of a gimmick. It might be a gimmick. You could say it's a gimmick. They sold, I think, like 50,000 in 2016 when they first introduced that. But then maybe it was 2015 then, because then the next year they sold 1 million of them. And it's not something that you necessarily know you're buying unless you're reading into it. They don't look any different. The shoes don't detract. There's no detraction from the shoes based on recycled plastic. And in the US and other affluent European markets and Asian markets, long term, that sustainability factor, I truly do believe, will be a big deal. And if you can have good looking shoes for the right price, and also you're not wasting things and you're actually like taking waste out, that will help them. And I really do believe that. And then basically what's crazy and what you have to really think about in terms of Adidas' growth, it's been around for forever. They're growing really quickly in the US. Under Armour briefly surpassed them in the United States, and then they instantly surpassed Under Armour. They're probably not going to look back. I can't imagine Under Armour passing them again. In the last 3 years, their stock price is up about 200%, which is crazy for a company of this size, like I was saying before. And I'm going to kind of close out with like an anecdotal thing. And I know that's not the best way to look at companies, but I live in Chicago. I'd say not even 2 years ago, I wouldn't see really many people wearing Adidas shoes casually. Now you really see it a lot. I mean, it's obviously not as much as Nike, but that is what's growing, the lifestyle aspect of sportswear. A lot of people aren't really buying shoes to necessarily go run or play sports. I'm buying sneakers to wear on a Saturday, to wear to work, just to wear casually, and that's what's growing. That's like what the Lululemons of the world are doing. That's what Under Armour is failing at pretty miserably at this point. Not many people are wearing Under Armour shoes out of a real hardcore sports setting. But our projections have Adidas only growing even more in 2017 after their crazy growth in 2016. And their CEO is not satisfied with where they are now, which is a strong number 2 in the US and pretty competitive globally with Nike. They are ready to storm into the US basically and take over as much market share as possible in the sportswear market that's the biggest in the world, and they are not satisfied with number 2. They want to be number 1, which is, it sounds goofy, especially in this like cliche sense of a sportswear company wanting to be number 1, but they have plans to not just sit back and relax and realize, oh, we're a $25 billion company. They want to be bigger than Nike, and they have plans in place that they think will help them do that. And that does it for another episode of Full Court Finance here at Zacks. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcasts@zacks.com.